I think the key thing, again, as with investments, is for insurance, start early.
Right.
But for insurance especially, it is a lot cheaper when you're young.
Welcome to HLB's Wealth Podcast, your go-to destination for insightful discussions on wealth management and all things financial strategy. My name is Jessie Chahal, and today we will be speaking to Hor Kwok Wai, Managing Director, Regional Wealth Management at Hong Leong Bank, on the recent survey findings on wealth perception. It was conducted by the bank with more than 1,000 Malaysian respondents aged between 18 to 77 years old. As you can imagine, those findings are super interesting. According to a survey, only 12% of Malaysians consider themselves wealthy. Despite this, 79% of Malaysians do not have any form of official or documented financial plan. Now, why do you think this is the case?
Well, I think it's a perception of where they are in their life cycle, right? Most of the young people, when they come out, they naturally feel that they're not at that type of pay levels, or they've not accumulated that type of wealth to consider themselves wealthy. Right, but really, I think what we try to tell a lot of young people, especially, right, you have to start early, because wealth doesn't just come to you. You have to prioritize it. You have to really work hard for it.
You need to have a plan.
You need to have a plan.
And as we can see from this, majority of Malaysians do not have a plan. So is this now largely due to the fact or the assumption that, hey, I'm not going to have enough money, I don't have sufficient funds, don't expect me to come and put it in an investment with a bank on top of that, versus, having no idea that a financial plan is important from the very beginning?
So a lot of it, I feel, for Malaysia especially, it boils down to, I think, a lot of financial literacy education for people when they're young, right? They must understand, right? You start early. So the time value of money is a very powerful tool. Right? The earlier you start, the more you accumulate your endpoint to, and the higher it becomes, right? So give an example, right? You invest 100 million for 10 years, and you invest 100 million for 30 years, right? The end point is probably 2.5 times higher at 30 years.
What if someone says, well, Kwok Wai, I don't have that much of money? I mean, what kind of figures are you looking at? 5,000, 10,000? Or is it as low as 100 ringgit?
Yeah, so for Hong Leong Bank, what we have done is we've created on our online connect the ability to start investing from 50 ringgit. And I think 50 ringgit is a very reasonable sum for a lot of young people today, right? Admittedly, even for me in my younger days, I didn't really plan. I think let's all be very honest. Not many people, do bother to sit down and think about their retirement, because I'm young, right? I've got many more years to go. And then you realize many years pass.
Fast forward 20
still
years.
No plan. Still no plan, right? That's where then the problem becomes. So what we're trying to tell young people is start early, because, like I said, the earlier you start, the more you can accumulate too.
Okay,
and
so
have a goal.
Right. Have a goal, start early and start little. It doesn't mean that you need to start with a big amount.
Yes.
I think this puts a lot of doubts to rest, because out of the 327 respondents that did indicate that they do invest, 57% reported that they invest in stocks, and then closely followed by 56% who say they have allocated funds to the ASB or ASM schemes, and also 54% who say they engage in gold investments. Additionally, upon all of this, 44% of the respondents favoured fixed deposits as their primary investment approach. Is this still a good idea? Are FDs still relevant? Is it still a good investment? Most people, they might say, look, I'm already struggling to save money. I do not have enough funds. How can they then choose to invest?
We always advise clients to look at FD as a part of a portfolio, right? So, if let's say you're a young person, the advice is always keep 6 months of liquid assets, your 6 months of your pay, ready and liquid, so that in case something happens to you, you have the security, right? So put that into fixed deposits, very safe. You know it's going to be there day in, day out. Having FD also works as part of a portfolio, right? So of course, on one side, you just mentioned, we have things like stock, Amanah Saham, which is like unit trust, which also invest quite a lot in stocks as well, right? and you put that as part of a portfolio. So FD could be, let's say, 20-30% of a portfolio.
Right.
It doesn't have to be the full portfolio, right? So every investment product has its space within each client's risk appetite and their risk return view of things.
Right, so we go back to that survey again, and it underscored a significant trend here of self-directed investing among Malaysians, which basically means what, Sendirilah? I just see what I think I want to do or how I want to do it without looking for financial professional guidance or advice. Of that number, 83%, a striking 83% of those they opted to manage their investments on their own. But notably, when devising a financial plan, nearly half of Malaysians, that number's at 49%, they say they went out to seek for financial advice through social media. That seems to be the starting point
the preferred outlet.
But also they consulted with family members. Right. We zoom out a little bit, and my question is, what is the bank's role in this day and age in terms of wealth management advice? It sounds like, very formal. I need to go with my file, and it just sounds like that it's quite intimidating actually to a certain extent. So again, in the survey that we speak about, draws up how Hong Leong Bank is really relevant in empowering investors with the necessary tools and knowledge so that they can make informed decisions when they want to build their their wealth management portfolio.
Yeah. So, we really segment our clients into, 2 or 3 segments, right? I think on one side, you have the younger investor base where they're more online savvy, social media savvy. So we try and come out with ways for them to transact on their own. As I just mentioned, the 50 ringgit, you can do it on Connect, no intervention from any bank staff. Then on the other spectrum of our client base, right, you have those that still prefer the advisory, right? And then there with our Build Around You tagline, right? For a lot of our clients, we look at them individually, right? And then we do analysis with them together where they are in their stage, whether it's building for children's education or retirement, right? And then we do their needs analysis, and then we do a goal. So those are those that have that plan, and we, review their portfolio probably once or at least once, if not twice a year with them, to ensure that their risks in terms of what they're investing in and the returns match what they were planning for.
Right. What do you have to say I can just imagine this scene, a young person, maybe first job, goes back home and tells his parents who invested in a very different time and age and say, I'd like to build a portfolio with a bank. And perhaps they then tell him or her, if you invest with a bank, your interest rates are going to be super low. Don't do it through a bank. I have a friend, and then that starts there. So what role, again, do you think, in particular, Hong Leong Bank plays to foster this financial awareness, as well as help to dispel myths surrounding this wealth management?
So what we do a lot of work in terms of mining the whole investment universe, right? And it is really then, as you say, right, incumbent upon us to then push this data to our clients, right? So, you just mentioned about things like fixed deposit, right? Potentially lower interest, but yes, we need to explain it fits within your portfolio, right? And it fits within your risk appetite. But we've also had products, where on an average return of 5 years, some of our sister company, Hong Leong Asset Management, has funds in Malaysia that has done 13 to 15% returns over 5 years, which is really good. Right. And even you start as little as 50 ringgit, 13 to 15% a year gets you, very far.
Hong Leong Bank has that information for you. It has something for everyone, depending on what you're willing to sacrifice and what you're willing to prioritize as well. Now let's zoom forward into the future in terms of future financial planning. Insurance, of course, that's important for the family, and not just for Malaysian but Singaporean investors as well. What should one consider? What should be the key consideration for individuals when they're planning for things like, as you highlighted, children's education, retirement, even legacy needs, emergency fund? How can professional wealth managers help to assist them in these areas?
Yeah, I think the key thing about insurance is it both protects and allows you to invest these days, right? So, if a life event happens to you, right, your family is taken care of, right? If nothing happens for the next 20, 30 years, you do get a tidy sum back. So it does sort of help you two ways, right? Well, I think the key thing again, as with investments, is for insurance, start early.
Right.
The same. I got not enough money. I didn't plan properly. It's all going to come again for insurance as well. But for insurance, especially, it is a lot cheaper when you are young. Choose a plan that you can afford as well, right? And review that plan, as you get married, as you have kids, and when you move into retirement. So the key thing is start early and review it every 5 years, with your financial planner and with your bank.
And Hong Leong Bank, of course, is there to assist and
Always
support
there to assist
all
and
the way.
support all
What
the
is
time.
striking to me about this is that there is something for everyone. Whether you are an early starter, that means at the very beginning of that chain, or you are a little bit more affluent and would like to delve into the areas of the premium banking, Hong Leong Bank has you covered. So it's at every juncture, and it does not matter the amount that you have or you don't have, because you're building that portfolio together.
Yeah. So actually, it's about, all the products are out there in the market, right? Whether it's equities, unit trusts, bonds, right? And it's about us, advising clients how to put this together in a portfolio based on your age and your goals, right? So I think all these is very important. In the last 2 years, we've done a lot more is really to have these type of conversations with clients, right? And as I said, my RMs are, tasked at least once or twice a year, see your clients, review the portfolio, and ensure that it still makes sense, both on the risk that is there and the return.
And that's so interesting. It's not like you're locked in forever. You can keep reviewing it, updating it, and changing that course of your investment and your wealth management journey.
Correct. So investment, that definitely is possible. But actually, even in insurance, right, there is ways to sort of manage changes in your life, So as I said, you might end up firstly buying enough to secure your income, right? Then when a kid comes along, you buy another insurance that then helps with his education in 20 years' time. Right. And then once your kid grows a little older, then you start thinking about your retirement. Right. Then it's a different type of insurance, right? So like I said, the key thing is what we really want to do is ensure we speak to our clients more, help them with these various life stages, and ensure it's a win-win situation for both the clients and the bank.
There you have it, a win-win situation. This has been my conversation with the Managing Director, Regional Wealth Management at Hong Leong Bank, Mr. Hor Kwok Wai. Thank you so much for tuning in, and make sure you tune into more podcasts, because Hong Leong Bank is bringing you the latest and some of the coolest, whether it's savings or investment programs you've ever heard of. So make sure you keep it locked on.